Other People's Money by Louis D. Brandeis, Chapter 7, Big Men and Little Business. J.P. Morgan
Exhale.
declared in the letter to the Portrait Committee that practically all the railroad and stroke development of this country has taken place initially
Inhale.
in the great banking houses. That statement is
Pause.
entirely unfounded, in fact. On the contrary, nearly
Exhale.
every such contribution to prosperity was
Pause.
initiated without their aid. The great banking houses
Inhale.
came into relation with these enterprises either after successes had been attained
Pause.
or upon reorganization after the possibility of
Exhale.
had demonstrated the funds of the early pioneers
Pause.
who had risked their all were exhausted.
Inhale.
This is true of all early railroads, of early straight railways,
Pause.
and of the automobile, of the telegraph,
Exhale.
and the wires, of gas and oil, of harvesting machinery,
Pause.
and of our steel industry, of textile, paper, and shipping
Inhale.
industries, and of nearly every other important branch of
Pause.
manufacture. The initiation of each of these
Exhale.
enterprises may properly be categorized as overt transactions, and the
Pause.
men who contributed the financial aid and business management
Inhale.
necessary for their introduction are entitled to share
Pause.
equally with inventors in our gratitude for what they
Exhale.
accomplished. But the instances are extremely rare where the
Pause.
original financing of such enterprises was
Inhale.
undertaken by investment bankers, great or small. It was usually done by
Pause.
some common businessman accustomed to taking risks,
Exhale.
or by some well-to-do friend of the inventor or pioneer,
Pause.
who was influenced largely by considerations
Inhale.
other than money get. Here and there you will find that bank aid was
Pause.
given, but usually in those cases it was a
Exhale.
small local banking concern, not a great banking
Pause.
house, which helped to initiate the undertaking.
Inhale.
Railroads. We have come to associate the great bankers with the
Pause.
railroads, but their part was not conspicuous in the early
Exhale.
history of the Eastern railroads, and in the Middle West, the experience was,
Pause.
to some extent, similar. The Boston and Maine
Inhale.
Railroad owns and leases 2,215
Pause.
miles of the line, but it is a composite
Exhale.
of 166 separate railroad companies. The New Haven Railroad
Pause.
owns and leases 1,996
Inhale.
miles of line, but it is a composite of 112 separate
Pause.
railroad companies. The necessary capital
Exhale.
to build these little railroads was gathered together partly through
Pause.
state, county, or municipal aid, partly
Inhale.
from businessmen or landholders who sought to advance their special
Pause.
interests, partly from inventors, and partly
Exhale.
from well-to-do, public-spirited men who wished to promote the
Pause.
welfare of their particular communities. About 75
Inhale.
years after the first of these railroads was built, J.P. Morgan and
Pause.
Co. became fiscal agent for all
Exhale.
of them by creating the New Haven, Boston, and Maine monopoly.
Pause.
Steamships. The history
Inhale.
of steamships lines is similar. In 1807,
Pause.
Fulton, with the financial aid of Robert R. Livingston,
Exhale.
a judge and statesman, not a banker, demonstrated with
Pause.
the Claremont that it was practical
Inhale.
to propel boats by stream. In 1833,
Pause.
the three Cunard brothers of Halifax
Exhale.
and 32 other persons operating the Quebec and Halifax Steam Navigation
Pause.
Company joined in supplying about
Inhale.
$80,000 to build the Royal William, the first steamer to cross
Pause.
the Atlantic. In 1902,
Exhale.
many years after individual enterprises had developed practically all
Pause.
the great ocean lines, J.P. Morgan & Co. floated
Inhale.
the International Mercantile Marine with its
Pause.
$52,744,000
Exhale.
of 4.5 bonds, now selling at 60,
Pause.
and $100 million
Inhale.
of stock, preferred and callable, on which no dividend
Pause.
has ever been paid. It was just 62 years
Exhale.
after the first regular line of transatlantic steamers, the
Pause.
Cunard, was founded, that Mr. Morgan
Inhale.
organized the shipping trust. Telegraph. The
Pause.
story of the telegraph is similar. The money for developing
Exhale.
Morse's invention was supplied by his partner and
Pause.
co-worker, initial
Inhale.
Washington was built with appropriation of
Pause.
30,000 made by Congress in 18.
Exhale.
66 years later,
Pause.
J.P. Morgan and Co. became bankers for
Inhale.
through financing its purchase by the American
Pause.
Telephone and Telegraph Company. Harvesting
Exhale.
machinery. Next to railroads and steamships, harvesting machinery has probably been the most potent factor in the development of America.
Inhale.
And most important of the harvesting machines was Cyrus H.
Pause.
McCormick's Reaper. That made it possible to increase the
Exhale.
grain harvest 20 or 30-fold. No investment banker had
Pause.
any part in introducing this great businessman's
Inhale.
invention. McCormick was, without means,
Pause.
but William Butler Ogden, a railroad builder,
Exhale.
ex-mayor and leading citizen of Chicago, supplied
Pause.
$25,000 with which the first
Inhale.
factory was built there in 1847. 45 years later,
Pause.
J.P. Morgan & Co. performed the service of combining the 5 great harvester companies and receiving a commission of $3 million. The concerns then consolidated as the International Harvester Company with a capital stock of $120 million
Exhale.
had, despite their huge assets and earning power, been previously capitalized
Inhale.
in the aggregate at only $10,500,000.
Pause.
Strong evidence that in all the
Exhale.
preceding years, no investment banker had financed them. Indeed,
Pause.
McCormick was as able in business as in
Inhale.
mechanical invention. 2 years after Ogden paid him $25,000
Pause.
for a half interest in the business, McCormick
Exhale.
bought it back for $50,000, and thereafter,
Pause.
until his death in 1884,
Inhale.
no one but members of the McCormick family had any interest in the business.
Pause.
The banker era. It may be
Exhale.
urged that railroads and steamships, the telegraph and harvesting machinery,
Pause.
were introduced before the accumulation of
Inhale.
investment capital had developed the
Pause.
investment banker, and before America's great banking
Exhale.
houses had been established, and that, consequently, it would be
Pause.
fairer to inquire what services bankers
Inhale.
rendered in connection with later industrial development. The firm of
Pause.
J.P. Morgan & Co. is 55 years old.
Exhale.
Loeb & Co. 56 years old. Lee
Pause.
Higginson & Co. over 50 years. And Kidder,
Inhale.
Peabody & Co. 48 years. And yet the investment banker
Pause.
seems to have had almost as
Exhale.
little part in initiating the great improvements of the last half
Pause.
century as did bankers in the earlier period.
Inhale.
Steel. The modern steel industry of America
Pause.
is 45 years old. The great bankers had no part
Exhale.
in initiating it. Andrew Carnegie, then already a
Pause.
man of large means, introduced the Bessemer
Inhale.
process in 1868. In the next 30 years,
Pause.
our steel and iron industry increased greatly.
Exhale.
By 1898, we had far outstripped all
Pause.
competitors. America's production about equaled the
Inhale.
output of England and Germany. We had also reduced costs
Pause.
so much that Europe talked of the American barrel.
Exhale.
It was 1898 when J.P. Morgan & Co. took
Pause.
their first step in forming the Steel Trust
Inhale.
by organizing the Federal Steel Company. Then followed
Pause.
the combination of the tube mills.
Welcome back. Online real
Exhale.
estate company Opendoor adding to its incredible year-to-date rally this week, jumping nearly 80% just yesterday after announcing a C-suite
Inhale.
shuffle, including a new CEO and a new chairman. Shares are up more than 500% this year. Joining us now is the company's co-founder and new chairman,
Exhale.
Keith Rabois. He's also a managing director at Coastal Ventures.
Pause.
Keith, this is such an interesting story. Obviously, this is the meme
Inhale.
stock du jour. How did you get here? How did you come
Pause.
back? Co-founded the company, went public,
Exhale.
started sort of during the SPAC phase, was kind of left for dead, and now it's all that everyone's talking about. How did you come back to it?
I think it's very simple. Retail investors figured out the potential of the company. Experts, Wall Street experts, etc., missed the potential. Residential real estate in the world is about a $289 trillion asset, and nobody has transformed the buying and selling of real estate in the world. And Opendoor has the most likely shot on goal of fixing the transaction, both on the buy side and the sell side. So the potential of the company is infinite, and it took people like Eric Jackson, activist investor, and normal American consumer to see that one way or the other, we're going to transform the way people buy and sell houses, and that company should be worth a lot of money. Many people compare us to Carvana. I think I used to compare us publicly, on Twitter and X, to Carvana. I think the multiple of Opendoor should be comparable to Carvana. I think we have less competition and more upside, so I think hopefully we do better than Carvana, but that comparison easily gets you to where you are today.
I get the comparison given where the stock was trading and how it's now beloved and has really turned around. But Keith, wasn't this always the promise of Opendoor, that it was going to transform the real estate market? And then iBuying really became out of vogue. Redfin exited it, Zillow exited it, and that was the business model here.
It was never out of vogue. It was out of vogue because Redfin and Zillow didn't want to do it. We were always successful. We minted free cash flow every year I was involved in the company. However, it's very complicated and very difficult to do iBuying well. But the value proposition of certainty, transactional speed is incredibly compelling to Americans. If you list your home for sale, you are going to wait 80 to 100 days, and 20% of the transactions that you think you've closed are never going to close. We give you certainty, peace of mind, convenience. That value proposition, we just need more awareness. In many markets, we have a double-digit market share, actually. It took Tesla until 2023 to get to a 5% market share in the United States. In many U.S. markets, we were above 5% last time I was involved in the company.
Yeah, but wasn't always the thing that once the housing market turned, then the company was stuck with a lot of mispriced inventory. It didn't work so well when the housing market was weak.
That's actually false. So the Federal Reserve raised interest rates 6 times with unprecedented speed, and that did create a cohort, one cohort, 1 month to maybe a quarter, of mispriced homes. However, every cohort thereafter was actually priced correctly. The problem with the company was bloated G&A. So real estate does have a roller coaster ride to it. There are phases, cycles, and they happen every 5 to 10 years, and you need a resilient cost structure that doesn't depend upon selling 6 million homes a year, because it can come down to 4 million. That's basically the zone over the last 30 years. And so the bloated G&A was a real problem, because as people stopped transacting, as interest rates went through the roof, the company's G&A made no sense, and so the burn rate made no sense. But you can fix that. There's 1,400 employees at Opendoor. I don't know what most of them do. We don't need more than 200 of them. It's got easier because of the advent of AI and other technologies. This will be a simple problem. One of the reasons why we were so excited to recruit Kaz actually as CEO is when he took over as COO of Shopify, I believe G&A as expensive revenue at Shopify was 14% last year, or this year I think it'll be 4%, and I'm pretty sure they'll be below that next year. So we need to do the same. We need to have the same discipline and rigor in Opendoor. And then when real estate bubbles occur, when they go up, we'll make an incredible amount of money. And when people stop transacting, meaning they only sell 3 or 4 million a year, we won't care, because we're still going to be profitable.
It's interesting you hinted at cost cuts and the fact that there are a lot of employees and that there's probably a lot of room for cuts, because that's been the other knock on this, is that it was hard to make this a profitable business. The margins were very thin, and for this year, I mean, I think we talked to an analyst who is expecting a loss, continued losses.
Well, I haven't yet dug into the financials. Kaz hasn't started until Monday morning. So when we dive into the financials, I suspect we'll have visibility, and we're going to innovate. We're definitely going to not take the forecast as a given. So I won't opine about the future, financial future, etc. I know the strategy. I have a high-level view of the strategy of things that can be improved. But there's no way you need 1,400 employees. So he's right. The company is completely bloated. The culture was broken. These people were working remotely. That doesn't work. This company was founded on the principle of innovation and working together in person. We're going to return to our roots. We have a mission.
Exhale.
You should read Kaz's post. It's a brilliant mission about how home ownership drives society. And that society is only good when people have home ownership. We need to fix that, improve that, make it more affordable. And, you know, the company kind of went down this DI path. It still, you know, was promoting certain things on its website, and I got re-involved. We're going to fix all that. We're back to merit and excellence.
Let's talk about that. Let's talk about crypto. Let's talk about more. One of our favorite guests, that is the CEO of Van Eck Associates, Jan Van Eck. Jan, welcome.
Great to be here, Ryan.
We got gold, we got silver, we got crypto. Let's talk about a lot of things. Number one, why do you think that gold and silver, boring old, expensive to hold metals, are doing so well?
Well, I mean, I think gold is in a multi-year trend of de-dollarization where the demand for gold and gold holdings by foreign central banks now are above that of U.S. Treasuries. So that's just part of a long-term trend. I think what's really exciting over the last month or so has been the re-rating of gold mining companies, which are up 100% this year. And why? Because the quarterly earnings finally showed they could get their discipline. They're lowering their costs, or at least not increasing. And so all the higher prices are leading to higher profits, and the market's paying more for those profits, which is great for those investors.
I'm going to quote you back to you, because before the show began moments ago, you were telling me that back in the day, and I remember this, gold mining stocks would perform with or even outperform gold. Not been the case for most of the last few years. Gold has gone up. The shares have lagged for the miners. Recently, though, they've made an aggressive comeback trade. Why do you think that is?
I mean, one of the worst businesses to own was gold mining companies. They've got X amount of gold in the ground, but they're not finding more. And they haven't had the money really to invest in finding more stuff. So it's like, okay, it's a dying business.
You dig out, literally, respectfully to all the gold bugs, you dig out rocks. And those rocks are more valuable than other rocks.
And you're getting less gold per rock. So the economics are worse. You have to dig out more tons for the same ounce. So no one wanted to own these companies unless they could get their costs under control. So there's been some consolidation, which is good. But the big companies like Barrick is getting rid of non-core assets. They just sold one in the last week. And Newmont has shown that they can control their costs. So anyway, gold share investors are getting excited.
It seems like anything that has to do with money or a form of money has been red hot lately. Obviously, silver and gold. You could use those to exchange for goods and services. Crypto today, I know we've got another trade with Leslie Picker for Gemini in a moment. We'll get your comment on that as well. Crypto and crypto exchanges have also been super hot. Why is I'm going to make it up right now, the substitution of cash trade been so hot?
I mean, there's been
is that a fair way to frame it? Maybe it's
huge
not.
Regulatory unlock here, right? So companies like Gemini have gone through, they've been around for quite a while. Coinbase, they can all offer more products and more services in a clear regulatory regime. So they're coming to market. And I think there's going to be a huge consolidation because it used to be crypto over here, securities over here. That's silly. A consumer wants to be able to trade both in one app. So I think we're just in the early stages of a play that's going to be a consolidation over the next year or two.
Yeah, that was, I was going to ask, my next question was sort of in my head, are there too many of these exchanges? My guess is if you believe that, then all these exchanges at some point in the next number of years, or maybe months at this rate, are going to be part of much larger companies.
They have to demonstrate value. If I can go to Gemini, which is listing today, right? They're a 20th of Coinbase's volume and customer base. They're in market cap. So they've got a long ways to go. They have to do something. Now, they had a problem with the crypto defaults. They got caught up in some of that. But now they're public. They have a currency. They've got to do something with it. Their app downloads are up 800% over the last several months, which is great because they have a credit card product. But they really have to do something.
But yeah, because don't all these firms ultimately just sort of bastardize each other?
They're
right? It's like sports gambling apps, right? A lot of people I know that do it fervently. They will go between apps because one gives them $5 as a bonus or a 10% cash back, whatever it is. You become just a marketing platform. And I worry that all these exchanges are going to just end up doing the same thing.
There are a lot. There's not that much competition, right? You have Coinbase, Kraken, and then Gemini further down. So it's not like you've got hundreds of these things, Brian, that need to go away. Rather, they're offering more products and features. And the shadow over all of this is Robinhood, which had a big investor day in
and $100 billion
Las Vegas.
valuation.
But they're offering crypto. They're taking crypto market share, is my point, because they have the customers. So they're all going to have to offer more products and services.